looking at this hour. Market stages a recovery after yesterday's sell-off. The Nifty trades above the 10,100 mark and above its 100-day moving average. IRB Infra recovers from days low after the CBI files a charge sheet against the promoters for illegal purchase of land. Rice stocks are surging in trade after reports suggest that Bangladesh plans to import as much as 1.5 lakh tons of rice from India. And Cipla's management sees 25 to 30% of the company's sales coming from the US market in the next 3 to 4 years.
Well, here's how the market is looking, and it's looking very robust. It is actually trading at the high point of the day, and I'm sure the market breadth has improved considerably as well. Banks participating, albeit not in the same way as the Nifty. So if you look at the Nifty bank chart, that's not gone up as much. And frankly, and then of course, before I get to the heat map as well, firstly pull up the Nifty bank and then get the mid caps and the small caps, the BSE mid cap, or the NSE mid cap and the BSE small cap indices, and just show you what the broader end of the spectrum is doing as well. Okay, I stand corrected. They have pulled up a bit in the last few minutes of trade. Mid caps and the small caps doing well. But the heat map should come up on your screen, because about an hour ago, there was no banking name in the top 10 gainers. Has that changed a bit? No, not quite. Even now, the top row doesn't have a single banking name. ICICI Bank is the top performer, which is up about 2%. But otherwise, we don't have banks in the top gainers list. But GAIL is on fire, 6.5% higher. Some bit of gains to Tech Mahindra as well. So there's a bit of a distributed rally that we're seeing in the markets today. It's not a single sector, save for autos maybe, which is participating in with wholeheartedly. There's not a single sector which is leading the charge up. It's distributed across spaces, right from telecom to metals to autos to oil and gas as well. So good going all round. Just one quick thought on the volumes as well. They should come up on your screen and just see if we are trading at above average volumes. And my guess is yes, we are. This is fairly decent volumes, but also remember it's Thursday. It's the day of the weekly expiry. So naturally the FNO volume will be much higher than what the cash volumes or what the average volumes will be as well. But the broader markets, Pradeep, much like the bank Nifty, they seem to have perked up really well in the last half an hour, 45 minutes as well.
Definitely, and if you look at it, there are certain stories like rice stocks, and we'll talk more about that during this show. You look at LT Foods, or you look at Chamanlal Setia Exporters. These are some of the stocks which have done really well today. Fertilizers also continue to move up. Fertilizers, the fact would be a stock to watch out for. Fertilizer and chemical Travancore. It used to be Purvankara from Real Estate Pack is doing well. Some more high beta names like GM Breweries, HFCL also doing well in today's trade, and you can see they are quoting very close to the day's high. The stock which has probably surprised is IRB Infra, because if you look at the day's movement, it kind of is trying to find support around 200 levels. Interestingly, the stock has fallen quite a bit over last week or 10 days already. So maybe market has factored in the negative developments. Some stocks which fell on weak earnings, Pokarna would be one such stock. Also, Shankar building. This stock continues to fall. Even in today's trade, the stock is has been down. Okay, it's now trying to recover. Now that is interesting. Over last half an hour or so, the stock has recovered. You look at Apex Frozen. That is yet another stock which has been highly volatile, but finally is stuck at the lower circuit now. 63 Moons would be yet another stock where the circuit filter level have been opened from 5 to 20%, and as of now you can see that sellers are taking the benefit of that maximum limit. Stock is almost down 19% by now.
Well, some green on the screen, but in the end, after the weakness which was there in the last few trading session, Nifty has actually recouped all of its yesterday's losses. So that's one good news. It's trading above its 100-day moving average, which it breached and closed below that yesterday. So 10,130 is where Nifty is trading currently, almost at day's high. Let's also pull up the India Volatility Index. Remember, that's been at elevated levels, but today it's cooled off almost 3.5%. And if I'm not wrong, it's currently at day's low, 14.5. It is still at elevated levels, but some cool off is definitely a good news for the markets. It needs to recede to the levels of 12.5 for any sort of sharp recovery to come in the markets. Let's look at Nifty then. What are the strikes which are active in today's trade. We've seen call writing coming around the levels of 10,300, but some bit of unwinding has been seen for 10,200 strikes. So that's one good news. On the put side, 10,000, which has been acting as a very, very crucial support for the index. Remember, that's the strike where over 80 lakh shares are there in the open interest. So 10,000 has seen once again 7.5 lakh shares added there. Bank Nifty is the one which is in focus. It's not recouped all of its yesterday's losses, and I don't think it's at par with Nifty right now. Only 50% of the losses, or slightly more I'll call it, because currently it's almost a day's high. 70 to 75% of yesterday's losses have been recouped. Today is the day for the Bank Nifty weekly options expiry. If you ask me what's the kind of range from current levels, you could expect anything 100 points here and there. That's where the expiry could take place, because writing has been seen around 25,100 and 200 levels, and put writing has been seen around the levels of 24,089 and the 25,000 strikes. So it's 100 points here and there on Bank Nifty. Watch out for that. But I just want to pull up Bank Nifty futures. It added significant amount of open interest yesterday, and today also it's seeing a lot of action when it comes to the futures side. Look at Bank Nifty futures, 12% addition. We don't see this kind of addition every day. Yesterday was a day when there was a short buildup. We don't know if today's rally is on account of short covering, or there are some fresh longs which are being seen at lower levels. Lastly, just two stocks. In a strong market like today's, you're seeing Jubilant Foodworks, which has been weak for the last two sessions. So watch out for that. Fresh shots has been seen. And lastly, Jet Airways is the stock which has risen in the past few days. It's up for the third straight session. Jet Airways open interest up nearly 12%. And on the cash side also, the volumes have been decent in the last few days.
Well, so that's all the stock spotting really at this time of the hour. Let's get in a couple of active managements. One of them is Solar Industries. The stock is in focus because it's gained the most in 2 months after Ventura Securities projected a 37% upside for the stock in the next 2 years. But it's not just really about what a brokerage house has done. The question is whether the future outlook looks fairly strong. Joining us is Nilesh Ranpalia. He's the CFO at Solar Industries. Good having you, Mr. Panpalia. Thanks so much for taking the time out. I'm just wondering, robust projections notwithstanding, how is business momentum looking like? Because until last year, or at least until 6 months ago maybe, the one problem for companies engaged in the kind of business that you are in catering to defense, so on and so forth, was that the capacities were very high, but the utilization was not happening because the order books were just not coming about. Has the situation changed?
Good afternoon. Our company Solar Industries India Limited is into manufacturing of explosives and initiating systems. Now we have got basically 3 verticals. One is our domestic market. In domestic market we are catering to coal mining, infrastructure and housing sector. The second is our overseas business, and the third is the defense. So we are very bullish on our domestic market because we have recently been awarded a tender from Coal India, which is worth almost 1105 crores, and we will be meeting almost 35% of Coal India's requirement. Then we also have got very strong orders from Singareni Collieries as well. Along with that, the housing sector looks to be very promising with the focus of state and the central government on that. And infrastructure, we know that a lot of road construction is going to happen in India. As far as your query on our capacity utilization is concerned, this is typically a seasonal business with lower capacity utilization during the monsoon period and peak summer. So though it appears that utilization is not there, and that's an industry average, and we are definitely beating the industry average. So our capacity utilization are fairly good. Now we are also very bullish about our overseas business because we have been in 24 countries with our products being utilized in almost 42 countries now. And we have now, earlier we were operating in Nigeria, Zambia and Turkey. Now our plant is up for commercial production even in South Africa. And this year we are focusing on Australia and Ghana. So soon we will be having our operations at...
No, I think we're just losing out Mr. Panpalia. Maybe we'll join him, reconnect the line, maybe the landline, in order to get through a better quality of conversation. But, you know, the reason I asked him this because almost a lot of people that we've been speaking to in the past said that the one problem for companies in the defense space and catering to defense as well was that the order inflow was just not there.
But their revenues from defense was hardly 10 crores in FY17. That's why I was just checking the numbers. So I think that's the next.
But that's not because they don't want to do more. It's just because they were not getting the orders. And I was again, the other bit to ask him, to my mind at least, would be that while brokerages are penciling in a 25% revenue CAGR, if you look at what they've done from Q2 FY17 to Q2 FY18, I don't think the needle has really moved dramatically. Q3 was 433 crores, Q4 was 442, Q2 FY18 is again 408. So, I mean, there is no trend out there in revenue growth. Let's see.
These are the quarterly numbers. So if you look at year on year, maybe the second quarter last year and the second quarter current year has improved. And interestingly, what we see is that over the last 3 months, it's not only the Ventura report that we are talking about right now, but some other analysts have also revised their targets upward. So maybe the recent commentary or the outlook that company has shared with analysts post the recent numbers are quite positive, and that's why you have more buy calls coming in. So we have 6 buy and 4 hold on the Bloomberg terminal if you look at the kind of analyst calls that we have got.
Just want to highlight the stocks trading at all-time high levels, and the Ventura report also states that if you look at the CAGR returns, Neeraj, in the last 10 to 11 years, it's around at 23 to 24%. So maybe just discounting the quarterly earnings here, if you look at this company, in the last 10 years, it's been giving consistent returns, and probably with defense, as Neeraj was just mentioning, coming into play, the prospects of the company going ahead look brighter. And as he was mentioning, housing for all by 2022, that's the other thing which I think the Ventura report was stating, because they are into segments like industrial explosive. The cartridge explosive is the segment which will benefit from this, because according to the report, Coal India will also have to increase in production with the infrastructure going up, and for that, for higher coal, you need players like them. So probably these are the few factors which Ventura is bullish on, but definitely the stock's been trading with gains of almost 2.5% in today's session.
Well, let's wait and watch. We'll probably try and reconnect with the management, hoping really for some numbers to come out from their end. Let's wait and watch if we indeed do get those. Meanwhile, what's moving around? In a bit, by the way, we'll tell you about a very interesting story that's happening in one of the large pharma companies, but that notwithstanding, just seeing as to what's happening at the broader end of the spectrum, stocks that have just moved up in the last few minutes of trade, if we can pull up UPL, I think that stock has done well. And from amongst the broader end of the spectrum, I think HDL and DLF and Bombay Dyeing. So seems like real estate stocks are now starting to make a move on the upside. But maybe housing for all benefits not just those stocks, but companies like solar as well. And I think Mr. Nilesh Panpalia is back with us. Mr. Panpalia, sorry, you were making the point that defense is but a small piece of your overall pie. So give us a sense of how the overall pie is currently, how it could look like over the course of the next 2 or 3 years, and would analyst expectations of a 25% compounded annual growth rate for the next 3 to 4 years, is that a reasonable estimate?
Yeah, definitely we will be growing at a compounded rate of 25% every year, and there are 3 segments which will be contributing to it. The first is basically the domestic market, which we are very bullish about, typically the housing and the road construction, which is happening, and the demand increase from the mining sectors. And second is our overseas operations. So right now we are having 4 plants which are operational. Our South Africa plant is recently started with its commercial production. So now we are present in Nigeria, Zambia, Turkey, South Africa. And this year again we are starting up in Australia and Ghana. So this will also contribute to our revenue growth. And third is of course the defense, which we are very positive about, and we already have an order book of around 130 crores from defense as of now. So then the supplies have started through defense. So all these sectors combined give us a good opportunity to grow at a rate of 25% year on year.
Mr. Panpalia, when you say 25%, it's interesting because it means you double your revenue in 3 years' time, which also means that you will have a visibility as to which clients of yours or which new clients that you might acquire will actually be sourcing your goods over next 3 years, so that you can actually double your turnover.
So see, we have got Coal India already there. We have recently been awarded a tender for next 2 years from Coal India, and we'll be meeting almost 35-36% of Coal India's requirement alone. So there are customers. Then we have orders from Singareni Collieries as well, which is there. And in case of infrastructure and housing, we have a wide dealer and trade network available with us through which we are supplying. And then we have got very strong orders for export, which are coming from almost 25 countries as of now, and our products are used in almost 42 countries. So these, and of course defense, the various ordnance factories and all will be our customers over the next 2-3 years. And as we move into Australia and move into Ghana.
Sorry, if you could throw some light on the defense part, you said you will be some of the defense establishment will be your customer over the next 2-3 years. Are you in the process of getting some kind of clearances, or how is it? What's the update?
So we have already started into defense almost 4-5 years back, seeking all the clearances. Now we are happy to inform that we have all the clearances and product approvals in place, and we have already received orders from them, and we have also started supplying to defense. And now we are also awaiting the RFPs, which we hope that will be there. The government, it was supposed to open in somewhere around March, but because of whatever delays, now they have said that by January the RFPs will be out. In that also for ammunition, and we will be participating most of these RFPs directly, and we hope to back further orders from there as well.
Mr. Panpalia, you're targeting 25% CAGR by FY 2020, right, which means you're targeting revenues of almost 3,100 crore. I want to know, with this 3,100 crore, what sort of contribution will you be looking from the defense segment?
Defense, we are targeting around 500 crores. 500
by FY 20 is what you're targeting?
Right, right.
Okay, and what sort of margins that you're looking at from the defense segment?
Defense business will have to await, because most of this price discovery is happening, but it will be same in the existing line of our explosive business.
Okay, you also mentioned that your South Africa plant has become operational. Could you tell us what sort of revenue contribution can one look at from this plant in the second half of the year?
So it has recently started. We have a quarter. So there we are expecting around 15 to 20 crores of revenue for this year. But for next year, we are definitely targeting more than 75 crores of revenue.
Okay, so if revenues indeed touch 3,000 crores, would you be confident of reaching about 400 odd crores of bottom line in FY20?
Yes, we are confident.
And beyond FY20, your growth rates will stay elevated at 20-25%, or could they come down a bit? Any visibility there?
We definitely see a lot of growth going ahead as well beyond 2020 with whatever roadmap we have prepared for our company. So, definitely we are confident about our growth.
So would it be northwards of 15% beyond FY20?
No, it will definitely will be 20-25%.
Even after FY20?
Yes.
For the next 2-3 years beyond FY20 as well?
Right.
Okay, great. Wish you all the best for all of that and more, Mr. Panpalia. Thanks so much for taking the time out and joining us. Very bullish commentary from the management of Solar Industries. The stock has cooled off though, about 2%. It's slightly illiquid, of course. 43,000 shares done on a day when it's bang in the middle of news. That's not very high volumes. Management confident of 25% growth till FY20 and probably beyond that as well.
I just want to highlight there are some top investors in this company. You've got HDFC, Trustee Company Limited, SBI Magnum is there, ICICI Prudential, DSP, BlackRock. So definitely there's some pedigree institutions which have institutions with good pedigree who've put their money into it. And I guess the promoter holding is on the higher side, and that's the reason why the stock is a bit illiquid, because majority of the free float will be with these institutions as well.
25 times FY20 earnings. It's not coming cheap. Just keep that at the back of your mind. 400 crores, market cap of 10,000 crores currently. That's an expensive stock. Just keep that at the back of your mind if you're investing in solar. But well, these days nothing's cheap. The Nifty isn't cheap either. And the question mark only is that whether this bounce that we're seeing today, we are now actually at the highest point of the day, about 1% higher, 10,142. Pradeep has some interesting charts to share on the index. Pradeep, what are you observing?
Exactly. So the question that would be in everybody's mind is whether, this pullback is it a pullback or is it more of an impulse move, which means a continuation of the uptrend that we have seen so far? And while I was trying to figure that out, two interesting pictures emerged, and we begin with the first one, which is right now at this wall. This is a daily chart, and what it tells you is last time around you can see these two lines, a green and pink one. And since we have been talking about moving averages, the last time around we came down from the highs of around 10,480, 490. We took support at the pink one, which is the 50 days moving average. We went up. What we see on the higher side again is that we hit a lower top and then corrected. This time we breached 50-day moving average. We even breached 100-day moving average and closed below that, at least for a day. That was yesterday. But today we have bounced back once again. So if you look at this short-term picture on daily chart, looks like that this could be a relief rally in a downtrend, because we have made a lower top, because also what has happened is we broke the 50-day moving average that was a support last time around. This time we came to 100 DMA. We again go up and maybe come down and break 100 DMA as well. That's a possibility. But the positive that you can spot here is on the oscillator. You look at the RSI at the bottom of this chart, and you can see that RSI was almost at the oversold level of around 30, has bounced back to 43 now, which means oscillators are really supporting this uptrend. But more interesting would be the second picture that I would like to share, because every short-term move is also a part of a longer-term move, and longer-term moves actually tell you the exact direction that market is likely to take over the next few weeks or months. So if you look at this now, this is a weekly chart, and this is clearly telling you that we are in an uptrend. After a strong up move that we had seen, we kind of consolidated for a few weeks. This happened in August, September, and from there we got this breakout. And while we are coming down, we have taken support exactly at the breakout levels. As we always mention, that in technical analysis, the support becomes resistance once breached, and the resistance becomes support once breached. So when the resistance got breached once in the month of October, now when we came back in December, the same levels are kind of turning out to be the support range, and they'll probably help us move back again. What is the significant point here? 10,140, the level that we see right now. Between 10,135 and 10,140, I would roughly say this is the decisive point. And since these are weekly charts, now what we need to watch out for is that today we may or may not close above 10,140. But tomorrow, if we manage to close above 10,140, that would kind of give a confirmation that this is not a pullback, but maybe continuation of a long-term uptrend. So that is the point to watch out for. You could probably hold your long positions with more confidence if you hold this level, 10,140, 10,135.
Pradeep, the options data was telling me the near-term range can be between 10,000 to 10,250 on the upside. Does it?
So on the first chart, if we come back, you will see that, if we just pull back and we go above, once again to the upper end of this chart, you will find that around 10,350 or would be a level to watch out for. But it depends. If we get there earlier, the level would be higher. If it takes a while, the level keeps coming down, because this is a downward sloping trend line. So between 10,300, 350, we'll probably face the significant resistance.
Okay, thanks for that, Pradeep. But a management waiting buy, so let's go across to that. The rice stocks are buzzing in trade after news of the Bangladesh government planning to import 1.5 lakh tons of rice in order to boost inventory. Is that the only reason? To discuss that space in more detail, Vijay Sethia, he's Executive Director of Chamandal Sethia Exports, joins us right now on the show. Remember, the stock is on a roll really the last couple of trading sessions, if not more. Mr. Sethia, good having you. Thanks so much for joining in. Can you tell us what's happening? Is it the Bangladesh news that is spurring interest in rice prices and then the stocks of the following companies like yours?
You see one thing, that the growth story for Basmati and non-Basmati. Bangladesh is not a key player here, but something important has happened in Bangladesh regarding non-Basmati. Last year, they imported just 82,000 tons of rice from India, worth 200 crores. And this year, from March onward, you can say April onward, they have purchased around 7.75 lakh tons of rice, worth 2,000 crores. So that is important change we have seen, that Bangladesh is aggressively buying non-basmati rice because of their problem of rains and losses to their own crop. So they may buy 1.5 million tons by the current fiscal year. So I
India.
see there is a, yeah.
So you would...
And,
okay, no, please carry on, sir.
I will add one thing. Regarding the growth in basmati sector, our Agriculture Ministry and Commerce Ministry, first time they have focused on one thing. Agriculture is focusing on educating the farmers regarding judicious use of pesticides, which was missing, which is a responsibility of pesticide companies. Maybe they were not discharging their duty properly, so government is stepping in, advising them to do the right thing. Second important thing is happening, that is the declaration of GI area. And APIDA, with the help of all the stakeholders, they are taking lead. With these two things coming into a place, realization, exports may remain around 4 million tons for the basmati, but realization is definitely going to improve. And if you look at the figures also, they also suggest that this improvement is taking place. Last year, from April to October, we exported rice about 2.3 million tons of basmati, and value was 12,000 crores. And in the same period, from April to October, 17-18, we have exported 2.36. That means almost same quantity. But the realization is 15,500 crores. That means 3,500 crore extra earning. That means the trade is making better realization as compared to last year's. Okay. So if the GI will be in the place and the traceability will be in the place.
Sure.
So this income for the industry and farmer is
looking very good. Now, Mr. Sethia, two things out here. The initial point that you made about how the non-basmati rice imports from Bangladesh alone would double. Therefore, that would mean that the value out there would double. One, if you can confirm that, and two, what role in its overall pie does Chamanlal Sethia Exports as a company have? What's the quantum of exports that you as a company have done? What do you expect you as a company to do for the rest of the year?
Very right, you are. My company's main focus is basmati, and in basmati field, my company's growth is quite significant. From our every quarter, what I'm looking into my sales, they are improving. The demand for basmati from different countries is growing. Maybe the real change will come once the Iran will come into the purchase market. Right now, Iran has given a limited permission. The stocks which were lying on the ports, they have allowed them to be cleared. But they have not issued the import permits for regular imports. So maybe in few weeks, the things will settle and fresh demand will come, and definitely Chamanlal Sethia will further improve its sales and its brand Maharani and Begum, and we hope they will do better. And as a company, Chamanlal Sethia has an initial strength as compared to its competitors. This company produces rice suitable for diabetics. This company produces dry heat parboiled rice. These are innovative products. They will add to the profitability.
Mr. Sethia, it's not shown. Mr. Sethia, it's not shown too much in the numbers, right? FY16, if I'm not wrong, your revenues were 482 crores. PAT was 37 crores. FY17, your revenues are 493 crores. PAT was 38 crores. So the growth has not come in the last 2 years. What do you expect FY18 to look like?
This season, you will see the results which company is showing now, and the sales improvement with the younger directors becoming more active, like Sukaran, Sankesh, and Ankit Sethia. And they're traveling and making contacts is helping the company to boost the realization and boost the sales. Both the things are happening.
Well, Mr. Sethia, with prices going up in the international market, we'll wait and watch if your higher realizations are getting reflected in the second half of the earnings. I just want one clarification with regard to GST. Are the rice exporters getting any sort of duty drawback? Because I remember when a GST rate came about for rice exporters of 5%, prior to that, not every state was levying VAT. What is the current status? How much of a tax you guys have to pay, and if there is any sort of duty drawback?
You see, there is no tax on exports, okay? Only the inputs which we are using in the packing materials and all.
Not even on branded items, there's no tax?
Branded rice is taxed, and branded is for the domestic market.
Okay.
They have put a tax. And they have made a level playing field, because some companies are taking advantage over this, and the finance ministry tried to plug those things. Where branded rice is selling at least 20% higher price, government want that they should contribute to the development of the country. That is their view. So branded is taxed. Otherwise, all other rice is free from GST. Whether you are exporting or selling in the domestic market, they are free. There is one issue, that is market fees. That fees is basically tax on a farmer, but it comes in as a part of our costing, which is having a different impact in different states. Punjab is on 4%, Delhi 1%, UP 2%, like this. So this is an indirect tax on the farmers. That definitely creates an unhealthy competition. I think government will look into this.
Right.
If there is a one GST, there should be one market fees also.
What numbers, Mr. Sethia? You mentioned that FY18 will look a good number because of the younger directors out there. Any guidance you can give us? Revenues and profit after tax?
I think this is, I'm not a financial head, I'm basically a...
But still, you will show 10-15% growth?
Production and quality.
Yeah, but you will show 10-15% revenue growth or more than that?
Definitely we will show good growth, yeah.
Over 15%?
Okay, Mr. Sethia, just one point here. You know, your margins are not really expanding, while, you know, this is what analysts have been hoping to see.
Rice basically is a very competitive commodity, okay? And you see where most of the companies, their sales have gone down in the last quarter. My company has given a better results. There is improvement. So there are few companies, they are performing good. There are mostly companies.
Now, because as you just mentioned, you know, earlier in this interview, that demand is growing and you could be able to get better realizations. Should we expect that over the next few quarters, margins would improve?
Yes, definitely.
Any number? How much?
This is something on future you can't comment like this, but definitely when the demand from Iran comes, it is a short period. They buy very quickly. So that a speculative mode comes in the market. And Iranians are in a rush to buy. They give better price as compared to their competitors. So this happens every year. They open for 5-6 months, so they have to buy rice for a whole year. So every buyer is very active to buy. So for people who have a proper packing facilities, definitely they will all get benefit from the Iranian market.
In which quarter would that happen?
Most likely in January, Iran will clear its position of imports. Last year they started their imports on the 22nd of January. And hopefully in January they will again open the market, which they normally do every year. So that will be a good sign for growth of Indian rice industry.
Okay, Mr. Sethia, thanks a lot for taking time out for us. Which means Q4 would be interesting to watch out for as far as Chaman Sethia exports numbers are concerned. But let's see, market is already celebrating you know, the expectations of higher exports, and the stock is locked up.
Just want to mention the other rice stocks are also doing well. If you could just pull up LT Foods or even Kohinoor, they've seen substantial gains in today's trading session. Today's gains, LT Foods is also just on the verge of being locked in upper circuit, up 19%. Kohinoor Foods now trading with gains of 14.5%. And Pradeep, the point he was mentioning about Iran, I think Iran had stopped importing rice from India. Earlier this year, I think they resumed importing, and that was a very positive news for all these basmati exporters. Reason being, the majority of the exports actually go to that market, and that's the reason. If you could just pull up the YTD returns of any of these stocks, be it LT Foods, KRBL, they've seen substantial returns for 2017. I guess KRBL is also mostly doubled, and LT Foods, there you go. This year it's up over 200%, and that's the comparison of all the three rice makers for this year. Three of them have given you good returns.
I don't know. I'm a numbers man. It just sounds a bit sketchy. 38 crores of profit. He's talking about 10-15% growth at best for the current year. Market cap 740 crores. It's a commodity stock which is trading close to 20 times. just doesn't give the comfort. Nevertheless, let's get in our guests on board to talk about how are they approaching trade this afternoon. Nitasha Shankar, Senior VP and Head of Research at KEC Securities, joins us on the show. You eating rice or having coffee or something like that?
He's not a big fan of carbs, so he doesn't eat rice at all. Huh?
No, but more importantly, are you eating these stocks? I mean, are you recommending these to your clients?
Not really, as you rightly said, that given the fact that they're commodity stocks, these kind of valuations and these kind of expectations that the realizations are going to, jump, realization growth is going to jump to the extent that most of the managements are expecting. We would prefer to wait and see whether that actually happens or not. Having said that, I think as an analyst, most of us end up missing the bus as far as the commodity stocks are concerned, be it rice, be it sugar, but we'd rather take it as a trading call rather than a fundamental call.
Neeraj, you should look at KRBL. They've launched quinoa as well.
Oh, okay. Very interesting. Maybe they'll get a market at certain pockets which hitherto they haven't been. But hey, guys, just saying, when Chamanal Setia is up 20% 2 days in a row, I don't know if it's purely on basis of this. Let's get in our technical experts on board to try and figure out well, what to do with the markets currently. That's a bigger market out there. Forget rice, forget what's happening to solar explosives and the others. The Nifty is up 1%. Sacchitanand Uttekar, AVP of Technicals at Tradebulls, joins us on the show. Sacchitanand, good having you. Thanks so much for joining in. Are you initiating any fresh trades on any of the key indices right now, Sacchitanand?
Well, good afternoon. Yes, in fact, we have been on the bullish side since yesterday evening. In fact, what we have seen is that 10,000 support has really worked well, and we are seeing a strong rebound in the market. We expect this particular move to extend right up to say 10,220, 230, and that's why we are on the bullish side until unless the markets do not close say somewhere close below 10,060 from here on. So I think it's a good strong pullback after 7 days of a consecutive decline. We have seen some momentum getting built on the long side now. So probably this can qualify as a pullback, and this particular pullback can extend right up to 10,220, 10,230 zones.
Okay. What stocks, Sacchitanand? First, let's get your technical ideas out of the way. In light of this view that you have, what are the stocks that you're recommending at this hour?
Well, there are two buying ideas which we are recommending. One on the position side, wherein MGL, after a fierce consolidation, we expect a strong breakout to be witnessed in a couple of trading sessions now, and long positions can be initiated here. Stop loss can be placed around 1,093, and we are expecting a price target of around 1,240 on an immediate basis. The second call is a momentum call on ACC. The stock did see a strong rebound from its long-term support trend line, and we expect that this particular pullback could extend right up to 1756 on ACC, and stop loss can be placed around 1677, and long positions can be added at this time.
Okay, so these are the ideas on the long side coming from Sacchitanand. But if you look at it, I think the star of the day is definitely GAIL, the top leader. They have also announced some 6,000 crore rupees capex plan, if I remember the figure correctly. And let's discuss that with Nitasha Shankar of KEC Securities. Nitasha, what's your view on GAIL? Actually, the entire sector is moving up on the back of the news coming in from GAIL.
Absolutely. So this was much expected and a much relief as far as analysts are concerned in the capex guidance coming in from GAIL. And in fact, we've been positive on GAIL, Mahanagar Gas, and even Indraprastha Gas for a while. They all enjoy, especially MGL and IGL, they enjoy a monopoly status in both city gas distribution as well as in pipe gas distribution. They've managed to maintain very healthy ROEs, net cash positive, and at the same time they've been paying out dividends. Between the two, we prefer Mahanagar Gas just because of the fact that the valuations are relatively more attractive. But given the kind of growth expected and given its utility status, we continue to remain positive on the sector.
Pull up UPL, that's also your Nifty counter. It's trading at days high now with gains of almost 6%. UPL is the stock that we're talking about. There you go, it's up 6% at days high. Natasha, do you guys track this one?
Yeah, we've been positive on it for about a year now.
Okay.
So the company has been doing quite well with its portfolio all over the world. In fact, they've managed to sort of de-risk themselves by spreading out in all the countries, and at the same time, even the Indian portfolio has been doing quite well. Brazil was a bit of an issue at a time, but that too has been sorted out. It is a good company. It has an excellent set of brands under its portfolio. We continue to remain positive from a long-term perspective.
Okay. Tech Mahindra is another interesting stock. Yesterday and today, in the last 2 days, it has recovered quite a bit from the recent lows of 460-65 odd. In fact, it was falling. It started falling last week. It corrected quite a bit from 500 odd levels, but is back almost to the level where it was within just 2 days, especially today. With good volume, the stock has moved up. Sacchitanand, if you look at these charts, do you think there is an opportunity, or is it too late for traders? You'd rather wait?
Well, I think the trend is very much firm. In fact, the way it has rebounded from 460 levels, the higher side that we are looking at this particular counter is somewhere close to 540. So from a positional perspective, any declines towards say 485, 490 should be utilized to create long positions with an expectation of a move right up to 540. So I think one should be on the positive side so far as Tech Mahindra is concerned. If you look at the monthly scale, that is very interesting. In fact, the way we are looking at this particular recovery from 350 levels, it's a very sharp one that we have seen in last couple of months. So I think there's a strong case scenario wherein this particular stock could outperform the market even going forward.
And once again, the Realty pack is up and about. The Nifty Realty Index so far, I guess, yep, it is your top sectoral gainer alongside the Nifty Auto Index. So that's up almost 1.8%, trading at day's high. Let's look at its constituents. Indiabulls Real Estate is up 4%. DLF is doing pretty good, up 3.5%. Soba is the other one which has gained, and you've got your Phoenix and HDI. All of these stocks have seen gains here. Nitasha, from this sector, if I were to ask you, because the stocks have run up a lot, which is the one that you would pick up even at current levels?
So I think the only two names that we've been picking up even at current levels, one is Ashiana Housing and the other is Kolte Patil. Ashiana has managed to maintain a healthy set of numbers even during the downturn that the real estate sector was facing. They are in the entire affordable housing segment. They've done a good job as far as the pre-bookings are concerned, and they've been able to convert those pre-bookings into execution as well. So that is our top pick within the sector. And the second one is Kolte Patil. Clean balance sheet, excellent land bank, excellent history of execution, and the valuations look good as well.
What about a related stock that also shares your name, by the way, Shankar Building Products? What's happening? The last 2-3 days.
Where did this come from? I mean, what was this?
We don't have any view on it. I'm sorry.
You don't track it?
No.
Look at the stock, the way it fell, and from today's low, it has recovered quite a bit. But still, if you compare to the level it was earlier this week, still down. If you can bring the 1 week chart, you'll probably get an idea. So 7 days, if you look at, this is the picture which is actually coming in. So still down if you look at the movement over the last 3 days, but sharp recovery intraday at least. Sacchitanand, do you have a view on this on your charts? Any levels that you'll be watching for?
Well, we really don't track it on a very minute basis, but I think the way the trend has been, I think 1500, 1550 looks like a decent support. So in case if the stock corrects more, probably it may find some support near to this particular zone.
Okay, just looking at again stocks which on a day like this are trading at new highs. There is a stock that I'll talk about which is KEC International in a bit, so that's separate. Wiseman Forex is up. DLF has moved up a bit, and that's an interesting basket too. By the way, the other one that is really shot up in trade over the last few days is Prabhat Dairy, and now currently trading at 170, trading at life highs for itself. But let me stick to the real estate names. DLF up 3.5. There is Ajmera Realty which is up about 3.5, and we all know what's happened to some of the others in the recent past as well. Jay Bala, I'm told, is with us, Chief Market Technician at Cash the Chaos, joins us on the show. Jay, I was absent that day when you appeared last. I meant to tell you about the fabulous call that you gave on Jet Airways. We'll talk about Jet in a bit too. But since I've started upon this talk of real estate names, just wondering, are you spotting any trends there? Hitherto, DLF was the one which had not moved and some of the others had moved. Now DLF is starting to make some moves.
Yeah, I think this is just a flash in the pan. It's not a trending move for me. So, I would take this as a, extreme short-term, buying opportunity rather than anything significant. I just see this as a chop in a long-term sideways move or a slightly trending lower move. So I don't see this as a big move in the real estate sector. To me, it's a neutral and an avoid for me.
Okay, what about the index, Jay? 1% higher? Is it a neutral and avoid, or are you bullish?
Last time when we spoke, we were talking about the markets needs to come below the 10,090 lows it made. The market has exactly done that. It's clocked a low closer to 10,030, and we had suggested a 10K put of December, and we had even said that the put might not go right in the money, but it will go very close to it. So far, it's all so good, but nothing stops the market from doing one more jig up and another low down, but that will be getting a bit complex. We'll call that a complex correction. Let's not get too technical about it, but at the moment, at the risk of the market going lower, I'm trying to turn bullish here, but I think it can't rule out the possibility the market can go down one more time, but still I'm turning bullish on the market. I think if the markets were to take out 10,350 on the Nifty, I think it's all clear for fresh record highs for the market, but there is a risks there. We have to be aware. So your allocation at this point of time, if you're turning bullish, you got to be very sensible.
So last time around, you recommended buying put. This time, would you buy a Nifty call maybe at what level?
Yeah, last time I checked, the January 10,500 call was trading at about 59 or close about, and the December was trading at about 19. 19 is it's a easy bet, and it's a very low risk opportunity. I think if the markets have already bottomed like we are anticipating, I think this can even go to something like 100, 120, and we are likely to cross 10,570. If this is the 10,030 and change that the low that we made, if that's going to hold, I think it's an excellent opportunity.
Jay, if you're expecting the markets to scale higher from these levels, if you could tell me which are the stocks among the Nifty constituents that you think will contribute the most to that move?
I'm not, let me make it clear, I'm not 100% clear like I was the previous couple of times. There is a probability that the market could go back down to something like 98.50, but the risks here are worth taking and worth standing in front of the market and expecting a record high. So as to your question as to which index components are likely to go high, Reliance, my all-time favorite, is there, but the trading opportunity is quite low. Look at something like Coal India. I think it's coming into an important support. 249 is a very strong support for it. I think it's unlikely to go into that zone, and if Coal India were to hold above this level, I think it's looking at something like 300, 320. So that's a good trading opportunity in the frontline name. I have a couple of picks in the stocks that are not in the front index names. One is Delta Corp. I think it's coming into very strong support. It's clocked sideways to a price correction, and also done a little bit of time correction. So and it's also heading into a very strong support zone of 240 to 220. If the zone were to hold, I think it's very likely that it will hold. Let me put it that way. And this stock is likely to scale beyond 320. And if you look at something like old-time transformers, this is very similar to Delta Corp, but the picture is slightly on the medium term. It's had a stellar run from 2013. It's gone close to 1300. From 1300 now it's heading very close to a strong support region of about 1000. I think this stock is likely to hit to something like 1500. I will not be surprised if it's goes to something like 1700. So watch out for these two names.
Okay, Delta Corp and Voltam Transformers, these are the two stocks that Jay is recommending today. These are with slightly medium to long-term perspectives, and if you look at the expected returns, that is also will be in line, a target of 325 on Delta and 15 to 1700 on Voltamp are the targets that Jay has suggested. But let's put spotlight on KEC International. The stock has gained most in 9 months today. It's also trading above all its key moving averages. And Neeraj is here with more details. Neeraj?
Okay, I didn't know about that part, but I just thought I'll bring in some elements of the terminal as well into KEC because it's very close to some target levels that the recent brokerage notes put out. I was looking at what they said at the Motilal Oswal conference because Bloomberg Quint had partnered with Motilal Oswal to bring that mid-cap conference. And in that conference, I remember the conversations came around KEC and what they had to say. So they believe that the management says that railways will offer robust opportunities in electrification. I think they get some targets that, according to them, railways would probably electrify 4,000 kilometers of lines in FY18 and some 8,000 kilometers of lines in FY19. So that should also be a positive for KEC International. And all of this happened in the matter of the last 2 or 3 sessions. Since then, the stock is actually on a bit of a roll. Now bring up 2 or 3 things that are happening. Yeah, they of course see better orders from state electricity boards as well. So that is something that they mentioned in that conference. But I just had to bring up some trading patterns and some views out here. Firstly, look at this. There's a consensus price target of 357. 25 people have a buy call. Only one sell call on the street. We'll be asking Nitasha what her view is if she has one on KEC. But just the fact that it's trading at 20 times FY19 estimates, and after this rally at about 345 odd, it's very, very close to the kind of levels that most brokerages believe it should hit over a 1-year time frame. So this is the sign of a bull market, that a good stock really gets taken to this target prices very, very quickly. And on above average volumes in today's session, even the trading bit is looking very, very positive for KEC International. Look at this jump and the surge in volumes in today's session. And at the peak, when we close trade, it could actually be trading, trading volumes could be 7 times its 20-day average. So that is one. Jayesh pulled up a very interesting chart of how they've been able to reduce their debt over the course of the past few years. Or rather, even if the debt went up, just look at the reduction that they've had in the last 2 years. We don't have the 2018 numbers, but there is a debt reduction there too. But this is the peak. 2016, the debt had hit a mammoth 30-odd thousand. And at that point of time, the management had come out and said that they are on a debt reduction drive and it will come down. They brought it down substantially in 2017. And from whatever little I remember, that constant commentary has been in FY18. They will see a further reduction, not to the same tune, but they'll see further reduction of debt as well. So there's been a bit of debt reduction that has happened in KEC International. They've spoken very optimistically at the brokerage meetings as well. Most brokerage notes speak very positively about it. The only caveat, the valuations, and I'll just bring up that plate for you because trading at an FY 17 EPS of about 19 odd rupees right here. It's trading at about 17.5 rupees. It's trading at around 19 to 20 times for a company which is going to grow at about 10 to 15 or 20%. It's not coming cheap. But then I think most people would argue that nothing is coming cheap. Nitasha, have any thoughts here? KEC International?
So I think we've been buying on the company for a while and we continue to remain positive because again, like you rightly said, that we think that railways is going to be a big piece for them, and at the same time improvement from SEBs too would be helping out the company. Yes, valuations are expensive, but then if you're paying for a better quality growth, then why not?
Okay, so what would your price target be, Nitasha?
So I forget the exact price target, but we do think that the stock has another 15 to 16% to go.
But you would be a buyer at these levels too?
Absolutely.
At 342, 9% high, you would be a buyer in KEC.
Yes.
Sacchitanand, is there a trade here, KEC?
Well, this trend is certainly very strong. In fact, on the monthly scale, we did see a rising 3, which is a continuation pattern. And the follow-up move has been very in line with that particular pattern. So I think price targets are right open till say 370, 372 zone, and probably keeping a stop loss somewhere close to say 320 on a closing basis. One can look at buying this particular stock.
Okay, that's the view on KEC International. Just also want to highlight, I think these are the all-time high levels that the counter is seeing, or at least the fresh 52-week high in today's trade. But what else is doing good? Pull up TT Limited. That counter has been locked in upper circuit. It's up almost 20% so far in today's session, and that's the upper circuit limit as well. And you've got stocks like TV18 Broadcast, that's gone up 6%. Canfin Homes, that's also trading at day's high, that's up 6%. If Canfin Homes is trading, yep, it's at the day's high. Jay, any of these stocks that look nice on the charts, TV18 Broadcast or Canfin Homes?
Yeah, the media stocks are looking a bit interesting. There is definitely a short-term trading play here, but instead of TV18 or Network 18, I think Hathway Cables at this point of time looks a little more interesting. I think it's got upside of about 25 to 30% from current levels. So if you've got to pick something within that's not yet caught up with these moves, I think and it's also within the related play, go for Hathway Cables.
Okay, Hathway Cable is an interesting stock in the media sector. That is what Jay believes. Moving on to the buzzing stock of the day, LT Foods. Diki Mirchandani is standing by with more details.
Hi, LT Foods has been locked in our upper circuit limit of nearly 20%. Now the intraday gains are the sharpest that we've seen since Feb 8. If you look at the volumes have been a good picture here. It has been a 30-day, volumes are currently trading at 31 times at 30-day average volumes. Now stock has gained as much as 200% over the last 1 year. The trigger remains that Bangladesh, which is the world's fourth biggest rice producer, set to import rice, especially from India, to combat the price rise. Now it plans to import around 1.5 million ton for FY18, and the prices of import duty in that particular state, in that particular country, has been reduced twice, which in turn is encouraging such imports to happen more frequently. If you look at the company that we're talking about is the maker of the Dawat rice and has a market capitalization of around 2,300 crore.
Okay, Nikki, thanks a lot for joining us. Clearly, all the rice stocks today have been buzzing, and we did interact with one of the managements who were sounding pretty bullish, and clearly they've said that the prices from the international markets have been going up, so expect higher realizations in the second quarter. Jay, 14,800 and counting. Do you want to guess what price is it?
Bitcoin.
Yes. Are you tracking this one? Do you have Bitcoins?
Yeah. If I had Bitcoin, I would be retired and I'll be sipping my pina colada in Hawaii.
Jay,
so,
but
I understand where you're coming from.
What's this euphoria around Bitcoin? I don't know. You're sitting in Asia somewhere, I guess in Singapore. What is this euphoria? Because I don't know, there was some trend which was currently being circulated in the market that people who are buying Bitcoins in dollar denominated terms, only they are making money.
Yeah, that's true. Interesting fact is that in Singapore we have a Bitcoin, ATM. We can put in dollars and pick out Bitcoins. So basically, I know where you're coming from. You're basically trying to ask how much it's going to, last. Is this a bubble, or or is it's got some more steam left? Let me put it this way. It's interesting. I don't think this is the final highs that we are seeing, but it's bound for definitely bound for a short-term correction, and it does look like it's got further highs to come through once this correction is done. But if you want to make money, it's definitely risky. It's a risky bet, but there is a lower risk within the cryptocurrency space. You can look at something like Ethereum. That's not spoken about. That's not that well covered. So and the risks are slightly lower here. And look at something like Ethereum. There's the risk is just something like 290. It's trading at about 415, 420, that range, and it's likely to double from current levels. Watch out for that.
Wow, very interesting.
Here is the Ethereum owner, the co-founder. I was watching his interview yesterday. He's also making money, by the way, on Bitcoins, and instead of stock options, he's given Bitcoins to his employees.
Yeah. So both. It's my two bits here. Both Ethereum and again, standard disclaimer. At least I do not know anything about how to value a Bitcoin, but having done that show very recently, both Ethereum and Bitcoin essentially follow that underlying technology of blockchain. So there's a bit of a commonality to those two. If you look at a clutch of other cryptocurrencies as well. There are some asset-driven cryptocurrencies and there are some investment-driven cryptocurrencies where promises have been made to investors that if you buy this cryptocurrency right now, in about 1 year's time, the value would be as much. So they're purely being bought from an investment perspective. But a currency is not essentially an investment-driven asset. That people are using that right now as a separate thing. Eventually, it will probably be traded as a currency would be traded. At least that's what the founders of blockchain and the guest who was talking to me was telling me about. But again, I'm no one to comment really too much on this because it's just very difficult to.
So I doubt
really
if any currency
anything.
has moved like this, in history. The real currencies which are controlled by the government don't move like this. So that's one point what any student of finance like us will find difficult to comprehend. I mean, for whatever reasons, why should a currency move like this?
Well, so remember, there are 2-3 things here, right? Amongst other things, that the value of the Bitcoin goes up not just because of buying and selling. There is also this cost of production of Bitcoin, which is the cost of all the electricity that is generated in mining those 1800 Bitcoins every day. On a single day, there are only 1800 Bitcoins, only or otherwise. I don't know whether 1800 is a large number or a small number, but 1800 Bitcoins that are mined. And let's say if there were 500,000 miners mining these Bitcoins 6 months ago, now there are 1.5 million, or maybe there are 1 million. And if indeed 1.5 million miners would be mining those same quantum of Bitcoins, then the cost of mining those Bitcoins goes up substantially. Now, whether it goes up in the vein to make the prices move up this much, again, I do not know. But all I'm trying to bring out to the notice of viewers out here is that Bitcoin moving up, it's not just a factor of demand and supply. There are costs attached to mining which also impact the price of Bitcoin. At least that's what one of the internetdollar.org, the guys who mine Bitcoins, was telling us on the other show. But anyways, if you want more information, quite frankly,
I'm sorry to deviate.
No, please log on to bloombergquint.com and type in Bitcoin, and that clutch of articles that Bloomberg Global Intelligence has put out is this interaction that we did with 2 experts as well. So all of those data would be there. Log on to bloombergquint.com and find out about Bitcoin. But yep, nearing into 15,000. There are some other stocks which are doing very well too, though probably not as fabulous a move as Bitcoin. But hey, Yash, they give Indian investors a chance to buy. What are the Fab 4 on your list today?
So good afternoon, Neeraj. We kick things off with GAIL India, and this one is up the most in over 2 months after the company announced their capital expenditure plans. Now they have set out a capital expenditure of almost 6,000 crores until FY19, and they plan to use that to lay down an additional gas line of almost 2,500 kilometers by 2020. And with that news, the stock is up with healthy gains of about 7.5%. Also, we have Religare Industries. Now this one is also up and is locked in a 5% upper circuit. Now this one has snapped its 3-day losing streak today after 1.8 crore shares, or nearly 9.6% of the overall equity exchanged hands via multiple block deals today. It would be interesting to see who the buyer and sellers are. Also, we have M&M Financial, not a very handsome move, sitting at gains of about 2.5% after the board said that it has completed the QIP issue and has raised close to 1,100 crores after allotting some 2.5 crore shares. And lastly, we have Wiesmann Forex. Now this one is up about 4.5% today after the company came out with their bulk deal data yesterday, saying that Girik Wealth Advisors had bought close to 0.7% stake in the company.
Wiesmann Forex has been going up, at least in the last 1 month. That stock's given you good returns. Thanks, Yash, for bringing all the Fab 4 stocks of the day. Just want to highlight the telecom stocks. Pull up Bharti Airtel, pull up Idea, as well as Reliance Communication. All of them are trading at days high. Bharti Airtel up almost 6%, Idea 4.5%, and Reliance Communication has also seen some gains. If you could just pull up Reliance Industries as well. All right, that's also recovered from its day's low. I don't know if there is any development here, but clearly in the last 5 to 10 minutes, there has been buying in the telecom stock. Nitasha, any of them that you guys track or like at these levels?
So amongst all of them, we still prefer Bharti Airtel because the kind of competition that we're seeing in terms of realizations on data side, voice is in any case almost gone. We do think that if anyone can survive, it would be Bharti Airtel. They do have a relatively better balance sheet as compared to Idea. Arcom, of course, is not even counted as a telecom stock. So we prefer Bharti Airtel amongst all of them. Infratel, on the other hand, is another company that we are quite positive on, Bharti Infratel, because that is a cash-rich company. They play out on that typical operational leverage that any incremental tenancy that they see or any kind of incremental rent that they see over there, that comes down straight away to their EBITDA and flows down to the PAT margin. So that's another company that we are positive on. In fact, if we had to take a call between the two, we would prefer to buy Infratel at current levels and then go ahead with Airtel.
Great. One last thought. Any stock ideas that you're recommending afresh? I know last time I remember when we spoke, you had mentioned Symphony as one of the key.
Yes, I think the last time we were talking about Future Retail as well.
Oh yeah, it's fallen so much.
Yeah, we still like that company despite the fall. We think that the story is yet to play out over there. So that's another stock that we're positive on.
515 from 653. Okay. Right. Thanks a lot for that, Nitasha. Thanks for joining in today and giving us your thoughts. Okay, in just moments from now, we will talk about which stocks are going to enter into the ban and which stocks are slated to come out of the ban in about 5 or 6 odd minutes. But before we do that, stocks that have moved up in the last few minutes of trade. And on the large cap end, it's probably Bharti Infratel as we spoke about, but slightly broader end of the spectrum. Trend has inched up a bit. I think today Motilal Oswal has come out of a slumber of some kind. It's just inched up in the last few minutes of trade. Watch out for Motilal Oswal as well. Techno Electric is showing a bit of a spike, so watch out for that stock too. Actually, these stocks didn't fall too much yesterday. I was looking. Edelweiss, IIFL, Motilal Oswal didn't have any kind of a move when almost all the other financial names came off in trade yesterday. Jay, do you track this space? And after making a big splurge over the course of the first 9 months, Motilal, IIFL, Edelweiss, you have to say, have quietened down a bit.
Are we talking about the brokerage stocks?
Yes, but the top 3.
No, I haven't actually, to be very honest, I haven't checked those charts in the last couple of days. So, my analysis won't be current. So I'd give that a pass. I'm sorry about that.
Okay. Do you want to just recap my memory on Jet Airways, Jay? There was a fabulous sell call given. I'm guessing you would have covered it already. But what's the thought here on?
Yeah. Yeah, see, basically, it's still got one, from a medium to long-term perspective, it's got one more chop up. So basically, it can come back to the 720 levels from where the stock fell. It's likely to come one more time closer to that. And then I think it's going to be a deeper fall for the stock. We have also already pointed out that we are negative on very positive on crude. So because of that, the negatives are likely to spill into the airline stocks. So, if you have not got out of the stock, you make use of the next leg up. I think there's one small leg up coming up. It can push very close to 700, and if you're lucky enough to get that, I think that will be the last chance to exit. I mean, let me repeat what I said a couple of weeks ago. I'm bullish on Brent. Brent is heading to close to $80 and $85, and that's likely to bring fuel prices higher, and that's going to cause negatives for the airline industry.
You also have a call on Indian rupee.
Yeah, that's right. See, if you the price movements from the beginning of this year, the rupee has strengthened from there, and now at least whether it's a reversal in that trend or it looks like at least a short-term reversal in the correction for the price move from 69 to 63.5. I think it is an excellent low-risk trading opportunity at this point of time on the dollar INR cross. If you had to place a stop below 63.5, and you can expect a price objective of about 67, maybe even 67.5 for the USD INR cross.
63.5 is the stop loss, you said, right?
That's correct.
Okay. It should be 63.50 and not 60.50. Sorry for that mistake. So this is a call bullish on dollar actually and bearish on rupee. And Jay is expecting rupee to correct quite a bit back to 67 odd levels.
Well, that should be interesting for IT stocks. Let's wait and watch what
happens to market. That's the big question.
That's the big question too. But I would presume, Pradeep, that most people would believe that the rupee at the current point of time is overvalued. I mean, there should be some bit of course correction that should anyways happen. I'm not talking about the levels. Maybe 65 is the right level. Maybe 66 is the right level. But The current levels, most people that we speak to do believe, or most brokerage notes that have come out to.
And also exporters. I mean, they are the ones suffering really because of the strong currency.
Yeah, that too. Yes. What is not suffering though today, guys, is Bharti Airtel and GAIL. Is another planet today, GAIL. 7.5% higher, 490 now. This is a big move that we're seeing in the big boy. Mayuresh Joshi is with us, fund manager at Angel Broking. Mayuresh, what's happening here really? Gas Authority of India. You could probably argue that along with Reliance Industries, this has been the strongest oil and gas name in the last month and a half.
Absolutely, Neeraj. And again, if you look at their core sub-segments, LPG and liquid hydrocarbons has been doing exceedingly well. And the expectations here again are with domestic gas prices not having increased significantly, you're probably going to see more volumes coming through, specifically from ONGC-led fields. At the same time, because of the glut that you're probably seeing in the LNG market, the petchem side of the business is also expected to hold up pretty reasonably. So you can expect a huge amount of volume growth with moderation in input costs actually creating a leverage on the balance sheet. The other subsegments of the business, including the transmission business, I think that will grow a little bit more softly. But with the new capex plans that GAIL is expected to put up, and again a large element of the LNG imports from Gorgon, 86 or 88% of the same have got tied up. So the concerns that the markets had on that front should largely be rested by FY19. And the unified tariff revision, I think if that probably takes place much higher than what the street probably expects, the kind of EPS of 30 odd rupees that one really expects for FY19 can show a quantum jump in 2021. So yes, I think that's the premise that the street is working on. But our recommendation remains a hold with the big move that we've seen. I think the positives in the stock should continue over the next few years.
Anything you like, Mayuresh, in liquor space? We have GM Breweries moving up today by around 11-12%. Radico Khaitan also after a decent correction is up 4.5%. What do you really like in this sector? I hope not United Spirits.
Afternoon, Pradeep. So again, largely the stocks have moved up quite significantly. And a couple of reasons here as well. I think the premium segment is something that the companies are focused on, where the margins are much higher. So below average segments or below premium segments, probably you've seen volume degrowth happening, and that's a conscious effort that's put in. There is still some confusion in terms of the input tax credit levied because of GST, but I think large part of it has got rested in terms of what rates can actually start coming through. So as a lot of focus happens on premiumization and all the noise that we're probably seeing around state governments, liquor bans, so on and so forth, the incremental hit on the earnings has been taken by a lot of companies and do not expect a large hit to come through. So Radico is something that I'd be liking at lower levels. Again, volume growth has been significantly higher. You're probably seeing the same story play out in terms of prestige brands working very well for the company. So yes, I think this is one stock that we have liked in the liquor space, but declines is something that the investors should wait in terms of fresh investments.
Okay, stay on, Mayuresh, so much more to talk about. Stay on Jay as well as Sacchitanand too, but it's 3:10, so that time of the show when we tell you what are the stocks that are likely to enter into the F&O ban, likely to come out of the ban as well. Navneet Saluja with her observations. Navneet, what are you seeing?
Well, 3 stocks, Neeraj, that are likely to enter into the F&O ban for tomorrow's trading session. Remember, so far it's only JN Irrigation which entered the ban today. So JSW Energy, that's very close, 89%. That's the overall open interest in the futures and options market as a percentage of market-wide position limit. Just want to remind our viewers, for any stock to go into the F&O ban, it has to breach the 95% mark. So these 3 stocks, JSW Energy, Jet Airways, TV18, though yesterday was 79%, but I was just looking at the data today. There's a lot of build-up which has been seen on the futures side as well as a couple of option strikes. So if the 95% limit gets breached in today's session for these 3 stocks, they go into the F&O ban for tomorrow's trading session. So watch out for them.
And anything that you observed on the telecom stocks, Navneet?
Yeah, Neeraj, I think all of them went up in just last half an hour of trade. And most importantly, if you could just pull up the chart of Bharti Airtel, as you can see, it's trading almost a day's high. I just want to highlight it has crossed the 2009 highs, and it's come at a time, remember, when there was so much of talk of telecom industry being disrupted, especially for the incumbents, with Reliance Jio making its entry entry into the telecom space. But look at that, how the stock has moved up. The all-time high levels, however, of Bharti Airtel were recorded somewhere in 2007. But today it's at multi-year high because it's broken the levels which were last seen in 2009. I want to take Mayuresh view here. Mayuresh, Bharti Airtel, I remember until 6-7 months back, everyone became bearish on the incumbents from the likes of Idea as well as Bharti Airtel. But the kind of price action Bharti has seen just in last few months has been quite encouraging.
Oh, absolutely, Navneet. And if you look at the domestic side of operations, you've seen a huge spurt happening in data volumes. So in the quarter gone by, 784 billion megabytes is something that the Bharti Airtel consumers had consumed. Add to that, you're probably looking at the African operation recouping a lot of its losses that it has done. And they are trying to deleverage a lot of their non-performing operations there as well. So probably countries like Kenya, Rwanda, Tanzania, I think if they can deleverage out of these countries which are not margin accretive to the African business, the overall business does improve. Secondly, again, I think in terms of the Vodafone Idea merger and the kind of restrictions that it has got in terms of a few circles, that will definitely add on the subscribers that Bharti is looking at. The ARPU is probably showing signs of stability at bottom levels, around 144.5 odd rupees, which got reported in the quarter gone by. You should see stable numbers. The only caveat that happens is on two counts. One, in terms of the IUC cut, which has got incorporated, we should have a top line hit and an EBITDA hit as well for Bharti and Idea both. And second, in terms of the ROC drop that we've seen on account of rising spectrum costs and OPEX that the company is incurring. So I think those two elements will largely keep cash flows restricted. But the churn has been comparatively better. The SMS RMS share has held up pretty well. So yes, as I've been maintaining my stance, I think the hold rating continues on Bharti Airtel.
Okay. Bharti Airtel doing very good too. Just before we get to dealing rooms, Sacchitanand, a quick thought here. Bharti Airtel, is there a trade existing? By the way, as we speak, the Nifty is up 132 points. But Bharti Airtel, Sacchitanand.
Well, the stock on the long-term scale has clearly broken out from a 7 years of consolidation, and the way we are looking at this particular counter, we expect that this rally to just continue towards say 640, 645 levels. So in fact, whatever opportunities that we are getting on a decline, should be utilized to create long positions. Especially from a portfolio perspective, this particular stock should be a part of it. In fact, the way it has rebounded from the 480 mark, we are expecting that this particular momentum could continue right up to 540, 525 zone in the next couple of trading sessions. So probably keeping a stop loss somewhere close to 505, there could be a momentum based trade which can be initiated.
Okay. 3:15. Let's get in Darshan Mehta with his channel checks. Darshan, what are you gathering from your dealing room sources today?
See, Neeraj, one of the counters that's been spoken about is Prakash Industries is up almost 7% in today's trade. A large clan of Mumbai-based HNIs are actively accumulating the counter over the past few days, and over the past few months the counter has had a decent rally. So Prakash is one of the counters. Jet Airways is one of the last few results that is left. It's up 2%, but a large foreign brokerage is recommending this stock to its clients. So this is something that we hear. Results will be out today, but they believe that Indian aviation is very, very strong. So Jet Airways is the second one, and a small counter called Navbharat Ventures, in which there is a buzz of a potential corporate announcement that could come in. So it's flat in today's trade, but that's something that we got to know from certain dealing rooms, that there could be something cooking in this company.
Thanks, Darshan, for the update. So these are some of the stocks to watch out for in last minutes of trade today. Sacchitanand, by the way, IT stocks and mid-cap to small-cap IT names, Tech Mahindra is one, Aptech is the other one, and also Mastech. Mastech is up 6%, Aptech is up around 4% in today's trade. Any of these charts that look interesting?
Well, we have already discussed Tech Mahindra. In fact, this is one particular chart that is is available even for immediate from an immediate entry perspective. The way the entire monthly scale has been shaping up, what we are expecting is a V-shaped recovery on the monthly scale, which can push the counter towards say 560 kind of a zone. So off the lot, I think Tech Mahindra is far better placed, and even from here on, we expect this particular momentum to continue.
Okay. Let's get in some closing strategies from our experts before we continue our discussion on the fundamentals as well. Jay, if I had to request you to give me one closing strategy, it could be a BTST, STBT, it could be a short-term positional call, it could be a reiteration of something that you said earlier. Which one would that be?
Yeah, if you recall from our Diwali day conversation, when the stock was Bharti Airtel was breaking out about 440, we said it's a long-term breakout, and the stock is heading for 650 and 650 to 700. So that will be a good positional call. And last week we had mentioned something about Amara Raja batteries in the auto ancillary space, and that's also heading for record highs. And so that's a very low-risk entry point at this time. So these two names are pretty interesting for me.
Okay, Sacchitanand, same question to you.
Well, as I said, we are looking at this particular move to continue towards say 10,200 to 40 kind of a zone. Still I think the momentum has been very strong, and Apollo Tyres and PNB Housing Finance, these are the names which are coming on my screen. So probably from a slightly longer perspective, Apollo Tyres is providing a decent opportunity for positional longs for a target around 255. The stop loss can be placed around 240.50, and PNB Housing Finance is looking ready for momentum, and we are expecting that this move can extend right up to 1390. A stop loss from a trading perspective can be placed around 1323, and long positions can be initiated.
Well, Puravankara, that stock's rallied just in last half an hour of trade. I guess it's trading almost at day's high with gains of 16.5%. And especially today, you've got the Realty pack, which has once again bounced back. The Nifty Realty Index has seen good gains coming about. That's one of your top gainers, up almost 2% alongside Nifty Auto. Mayuresh, in the Realty pack, pardon me, we've seen a good rally in a couple of these stocks, even outside the Nifty Realty Index. You've got stocks like Kolte Patil or Puravankara, which have done pretty well. Anything in this pack that at current levels also you would suggest our viewers to buy?
So Kolte and Soba is something that I've been liking over the past few quarters, but the run-up has been pretty sharp. So I think outside this pack, which obviously I like and we do hold in our funds, I do like Brigade Enterprises. We have discussed this, but a large element of the receivables that can come through the next few quarters can be substantial. And the kind of mix that Brigade has got, both in terms of residential, in terms of the hotels that it operates out of, and the other annuity lease business that it generates income from, I think all these three subsegments are looking extremely strong. Again, in terms of earnings outlook, my own sense is that the earnings can be quite stupendous over the next few quarters, and because of RERA and consolidation that we are probably seeing, and again stability in the regions that it operates out of, Bangalore, Mysore, Chennai, Kochi, I think you are going to see strong earnings visibility and momentum for this counter. So any decline onto a stock like Brigade Enterprise becomes a very good buying opportunity for long-term investors.
Some more interesting stocks, that have been moving up in last hour of trade. Look at Rane Madras. This stock has given a swing of around 8.5% over last half an hour of trade. You also look at Meghmani Organics, which is up 8% now, and the entire swing has come recently. You can see that in last few minutes, Meghmani has moved up. You also have stocks like Hester Biosciences building on to the gains. Also active is JBF Industries. This has given a swing of around 2.5 to 3%. Mastech has moved up further. Ganesh Housing is another interesting stock which has been doing well. So there is quite a bit of buying in various stocks across segments that we have spotted in last hour of trade. Looks like, along with Nifty, the mid caps are also kind of giving a bottoming out indications. And if you look at the market breadth, that's really strong today.
Yeah, clearly market breadth has been strong since the morning session, so that's a very positive takeaway, I would call it, from today's trading session. But what's up with Jubilant FoodWorks? In a market like today's, it's down almost 3%, and it's not just today. Jubilant has tumbled nearly 6% for the week. That's trading around those levels of 1,650. Mayuresh, do you track Jubilant FoodWorks? If yes, then what's going wrong with the company?
I think it's the valuation aspect, Navneet, in my opinion. And again, if you look at the numbers, the SSS growth was very reasonable in the quarter gone by. And within the QSR industry, though you've seen hyper competition, I think the new strategies that the new management has probably envisaged for the company might hold it in good stead. Now, what probably happens even in terms of their capex plans and additions, both in terms of the standalone stores for its pizza business as well as Dunkin' Donuts, I think they have quite reasonably maintained their estimates, and they have curtailed their capex requirements for the next few years. So I think the operating leverage in terms of SSS growth should be very, very evident as more and more demand and discretionary spending comes through. But I think the only aspect that works against it is the high valuation that it demands. So unless it gets 2 solid quarters of consistent numbers, to re-rate the stock based on these valuations looks a little bit of an improbability. So I think money is being taken off the table, in my opinion, on Jubilant FoodWorks.
BEML, Sacchitanand, if you could look at that stock, it has moved up by 2.5% more. It's up around 4.5% now. Yes, that's the number. Going to close at the day's high. Is there a trade here?
Well, the most important or the significant point of this rebound has been the 200-day exponential moving average, which is placed somewhere close to 1525. I think the rebound looks very confident, and in fact we may see levels close to around 1640 going forward. So probably one can initiate some trading longs, keeping a stop loss somewhere close to 1545, and with an expectation of a move towards say 1640.
Sacchitanand, what about Titan? That's rallied 4%. It's trading above the level of 100 today, around 808, very close to its 52-week high. If somebody had taken a long, what sort of levels would you advise them on the upside?
Well, the stock is clearly trading in a new zone, and probably the way recently we saw a gap up move in the early part of November. The critical point would be a closing below say 730. Until unless this particular level is not breached on a closing basis, we expect that this particular trend should continue on the higher side. Talking about targets, it will be very difficult since there is no fresh pattern which is indicating any price targets. But so far as the trend is concerned, I think the concern level should be around 730. In case if that particular support is breached, then probably the stock may see correction. But until then, I think the trend is very strong, and we may see fresh highs getting registered soon.
Okay, just before we start wrapping up the markets, just one quick thought. Aside of what's happening to the large caps, the mid cap end of the market has some really stellar movers. KEC we've spoken about. Advanced Enzymes is one such stock which is doing rather well for itself. So watch out for that one too. And in stocks which are hitting new highs, we've spoken about the rice companies. One stock that we've kind of not mentioned today is Mastek, 8% higher. Sacchitanand, a quick 30-second view. Mastek.
Well, we really don't track it on a close basis, but 360 looks like a decent support for the stock. In fact, it has to close or register a close above 400 levels, and probably the targets close to around 430, 440 could open up. But so far as the levels are concerned, I think a firm closing is required above 400 for the next momentum to emerge.
Okay, hand it over now. Let's start wrapping up the markets, and then we can final thoughts from our experts. But hand it over to Pradeep, who's going to bring up the activity in the large cap space. Pradeep.
Well, it can't get any better. Century on Nifty, double century on Nifty Bank, and a triple century on Sensex. So really, one would not have expected this kind of closing. Yesterday, around the closing time, we had blood all over the place. We were closing at the lows, and today we are closing at highs. If you look at the mid cap and small cap, they've also participated. I think participation picked up towards the end. But if you look at the last tally here, BSE small cap is up around 225 points. Nifty mid cap is up almost 300 points. So there was a broad-based participation. But let's look at which were the key drivers as far as Nifty or Sensex stocks are concerned. You have Sensex 30 stocks here, and the participation came from Bharti leading with 6.5%. You had auto stocks leading. In fact, the auto index was the top mover today. Maruti, Bajaj Auto, both these stocks were doing well, and also Hero Moto. Tata Motors participated. Tata Motors also gained by the positive numbers that came from overseas sales. You also had Asian Paints and Tata Steel participating here. Well, some of the heavyweights like ITC, ONGC, HDFC Bank, even RIL were relatively quiet. Yesterday, RIL was actually leading, but today it gained only 0.5%. On the negative side, we had only 5 out of 30 Sensex stocks. Coal India leading here, down 0.5%. TCS and Wipro. So IT was another sector that didn't quite participate, although declines were also insignificant, so to say.
Well, good day for the broader markets as well. We've seen a lot of green ticks coming today. Let me start off with the rice stocks, which were in focus after the news came in. There were some reports suggesting that Bangladesh will be importing rice from India, almost an additional import of 150,000 tons. So watch out for Chamanla. That was locked in upper circuit. We also spoke to the management, some bullish commentary coming up there. LT Foods is the other rice stock which was up today. That gained almost 16%. Real estate pack was in focus. Nifty Realty was your top sectoral gainer. So stocks like Puravankara, even DLF did pretty well. Puravankara was up 15%. DLF closed almost at day's high with gains of 3%. From the media pack, when you see the markets recovering, your usual suspects, TV18 Broadcast, as well as you had stocks like TV Today, both of them registered good set of gains. So between 5 to 6% is the gain you saw for these two stocks. In Adani Power, this is the counter which rose, I guess, in the second half of the trading session and closing almost at day's high, a very positive sign, up almost 6%. The entire telecom pack gained traction in the last hour of trade. So Idea, that was up 5%, once again closing at day's high. And Steel Authority is one stock which so far has been underperforming, but in the recent past few weeks, we've seen Steel Authority performing well. So that was up 4%. KEC International is the other one which was up and about in today's trade. Just want to highlight 3 losers here. Jubilant Foodwork on a day like this tumbled nearly 3% and closing almost at day's low. IRB Infra was the other counter which was in focus, but the counter actually closed off its day's low after that news came in that CBI has filed a charge sheet against the promoters. And lastly, 63 Moons, where the circuit limit was revised from 5 to 20%. You saw the stock closing on a lower circuit with cuts of 20%.
Well, that sums it up. The day's trade, very, very healthy. And if we bring up the contributors list or the heat map, you will see hardly any red. This is such a mirror image. And I would say this is a bit of a surprise rally. I don't think too many people anticipated this. On hindsight, we can look back and say that bouncing off these key moving averages is something that the index would do. But this morning, I can assure you, not too many people would have anticipated that we would have a rally about 1.5% or 1.375%. We'll talk about this with Pradeep and our guests as well. To my mind, at least, this is a bit of a surprise rally. Participation from across the board. Banks finally making a move on the top contributors list, but otherwise it was a broad-based rally which didn't have too many banks participating, and which is why while the index is up 1.2%, the Nifty Bank is not up over 1%. It's just about 0.8%. It just shows that the market moved up despite banks not performing as well. The volumes once, and also want to see what the market breadth has looked like in today's session. One, the volumes naturally high on a day like this today. The cash market is at par. It's just the FNO and options, I would presume, which would have been much higher. And the market breadth, the advanced decline ratio should come up on your screen. It stayed steady for the better part of the day, not showing any signs of buckling down, which is very, very healthy news. Last but not the least, if you just look at the heat map, sea of green, it's ending just the way it started off trade, which is very heartening. Even on the index as well, the gap stayed. The number of advances to the number of declines stayed. I don't think the names moved around too much either. These were the stocks that were marginally in the green yesterday. They're marginally in the red today. But the gains that have come in I mean, you don't normally see a GAIL moving up 8% or the Asian Paints and a Bharti Airtel moving the way they have done today. It's a very, very strong move in the session. Final thoughts from our experts. Sacchitanand, to you first. What levels would you now be watching out for? Is it possible to think of higher levels immediately over the course of the next 2 or 3 sessions? Keep in mind, tomorrow it's the weekend and next week is a fairly data-heavy week in terms of the US Fed meet, as well as the exit polls results that might come out later on.
Well, as we have been communicating, we are qualifying this particular move as a bounce back move. But as I said, the key levels from here on would be around 10,210 to 10,230, where we see this particular move getting achieved. So probably, we are expecting this particular move to pan out in next couple of trading sessions itself. But the highlight for this particular trend should be around 10,340 mark. Until unless this particular level is not breached on the higher side, the overall or the broader trend for this particular expiry remains weak.
Okay. Thanks, Sacchitanand, for your thoughts. Mayuresh, what are your thoughts?
It's going to be a data-heavy week, as you pointed out. And again, in terms of the market move, my own sense is that it's going to be a range-bound market. As I've been mentioning, I do not see a structural downfall for the market or a huge correction for the markets. But again, I don't see a huge upside for the markets either. I think a lot of factors must start coming through in terms of corporate earnings, in terms of private capex, which is still a while away before it recovers. So earnings is something that the markets will look forward for in terms of a re-rating in valuations perspective. But largely, I think all the factors in terms of the Gujarat elections and any positive outcome thereof is going to have a positive sentiment effect into the markets. For the US markets, I think a rate hike is something that the markets are largely factoring into. So I'm not expecting a huge movement happening even on the yield fronts, because the yields have largely factored in both the US Treasury and even the Euro yields in terms of the spreads between them and the 10-year US yield. So large element of the market probably believes, and is my belief as well, that it will be a range-bound trade. It's going to be more stock-specific action in my opinion.
All right, Mayuresh and Sacchitanand, thanks very much for joining us today and taking us through your views on the markets. Well, it's time for us to slip into a short break. Don't go anywhere. We'll be back with more. Stay tuned.
Are we live? Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Well, welcome back. You're still watching Countdown with us. Well, some breather for the markets. You saw a strong bounce back coming after the weakness that persisted in the last 4 to 5 trading sessions. Nifty closed with gains of 1.2%. Bank Nifty, where it was the day for the weekly options contract to expire, it ended the day in green with gains of 200 points, but it definitely underperformed Nifty and even the broader market. So watch out for that. That's the Nifty contribution chart on your screen. It was a broad-based rally. Clearly, you can see it. Bharti Airtel batch surged in the second half of the session. That contributed the most, and your financials from the likes of ICICI Bank, Maruti Suzuki, L&T were also up and about. But as you can see, your top 5 contributors contributed just about 10 points here and there. It clearly suggests that it was a broad-based rally, which is a positive sign. On the losing side, what dragged it lower was TCS, Coal India, Wipro, Cipla, very handful of losers in today's trading session. The other positive news, that's the NSE stats there on your screen. After at least 5 to 6 trading sessions, you're seeing this sort of market breadth, almost 4:1 on National Stock Exchange. But I also want to pull up the India Volatility Index. You saw a sharp cool-off coming about. India VIX was inching higher in the last 5 trading sessions, and today it closed at day's low, which is a positive sign. About 14.2 is the level, but most of your analysts, sorry.
No, you don't have to be sorry. Somebody who gave a sell call on Bitcoin has to be sorry, because the Bitcoin has nudged the 16,000 mark.
16,000 mark.
Let's just get the Bitcoin chart up. This is 15,000. 15,072 for Bitcoin. I think the bets in the newsroom or the production room was that will we, by the time we end the show, nudge the 15,000 mark or no? And I don't know who placed the bets on which direction, because I guess we can only place bets on the direction of Bitcoin. I don't think we can place bets on the Bitcoin at 15,000 to a Bitcoin.
So from 12,000 to 14,000, it was about within 24 hours that rally took place, and this is like 14 to 15,000 in just 5-6 hours or something. I
wish I could shout out to Yash and find out, because he was telling me some statistic about how the last 1,000 points happened in a matter of a few hours or something like that. But that's the kind of statistic. But this is unreal. Bitcoin is at 15,000. It was at 14,000 just a few hours ago, and now at 15,000.
13 to 14, yeah, 13 to 14,000 was 3 hours. Okay. I don't know if 14 to 15,000 is lesser than that. But 12,000 to 13,000 was 17 hours, and look at this, 11,000 to 12,000 was 6 days. And let me start off from when it started to the rally till 1,000 took 1,789 days.
Well, here's one more statistic, that the first talks of Bitcoin being a bubble on a serious fashion came in when Bitcoin was at $30. If somebody sold the Bitcoin thinking it was a bubble, it's a case of sour grapes.
I just have a story here. If you guys don't mind, I can share it. I have a friend in US. Years back, he had a few Bitcoins, I don't know, 3, 4, 5, and I don't know what the value that time was, just 10, 15 or $30, as you mentioned. Since it was just lying like that, he didn't know what to do with it. So he went to Domino's and he purchased pizza, because they were accepting, Domino's was accepting Bitcoins at that point of time. And he just told me if he would have kept those Bitcoins with him, he would have been richer by 15 to 20 lakhs.
Well, yeah, that's stuff that only hindsight can tell us, but not something that we can act upon, quite frankly. But yeah, Bitcoin, the news is that Bitcoin is now at $15,000. That's quite a meteoric rise. Watch out for the chart of the day by Yash Upadhyay today. He decodes this whole journey and how every 1,000-point move, how swift it has been. It'll be there on BloombergQuint.com in an hour and a half from now. But
by then, I don't know where Bitcoin will be.
That's a separate story altogether again. Anyways, sorry, you were finishing the market wrap, but nothing sounded as exciting as Bitcoin, even though we went
I
up
almost forgot what happened in the markets today, but definitely I only remember that it was a good day for it. So India Volatility Index cooled off. Good day for the broader markets as well. You saw the small cap and the mid cap index rising as much as 1.5%. So let's see whether today's move was on back of short covering or not, whether there can be genuine buying which can take place from tomorrow onwards. Also, do watch out for the market internals today. The FIs were selling in the last 2 to 3 trading sessions, but let's see if we've seen any sort of buying coming back from the foreign institution investors. Okay, that's about the markets, but let's move on. The Road Ministry has actually decided to review its toll operate transfer model. The new road building scheme, which was launched by the government last year, requires developers to make an upfront payment of the toll that will be collected over the tenure of the contract. The Road and Highways Minister Nitin Gadkari told Purva Chitnis that the nodal ministry is looking into the concerns raised by the road builders.
Already we receive a lot of suggestions on that. We are rectify the things. We are receiving the tenders, and we will, as early as possible, we will finalize the tender.
And here is what one of the probable bidders for these TOT contracts, MEP Infra's MD Jayant Mahiskar, had to say about the hassles of finding funds to execute the project.
As far as TOT is concerned, TOT is a very new concept where the entire upfront or the monetizing of future receivables is done by the government. The first package is around 6,000 odd crores, which has to be bidded in the month of January. The total outgo would be close to around 6,000, since there is an upfront payment which has to be made. MEP currently is talking to a couple of large, I would say, funds and international players for a potential JV. And we are hopeful that we should be able to achieve one of them and bid for this project. Of course, the first project will be more of a pilot or experimental project where companies would, I would say, do a lot of due diligence, because you have to maintain the road, and the most important is the traffic growth scenario, because these are all national highways where you have sustainable traffic which has already flowed, and there is I would say 30 years is going to be, to my mind, is a large challenge in terms of the tenure of the project, because in Indian banks currently are supporting only between 20 to 25 years of funding. So 30 years funding availability or ability to raise that is going to be one point which needs to be really looked into. The second is the cost of borrowing, because these are large projects. Every single I would say 50 bips or 100 bips is going to make a very significant difference in terms of actual bidding. So I think time is the only remedy to see how it ventures out.
The emerging market index seems to be nearing its 100-day moving average. Bloomberg's Tracy Alloway caught up with Mark Matthews of Julius Baer to get a better insight on what is triggering the sell-off in the emerging markets, at least what was triggering the sell-off until yesterday. Listen into a slice of that conversation.
I think driven by two things. The first is there was a lot of retail speculation in Hong Kong over the last couple of months, and a lot of it was focused on Tencent, Ping An, companies that were IPOing in the internet space, and that unwinding has put a lot of pressure on the Chinese shares, and I think that's the major reason behind the sell-off in the emerging markets. Tencent, for example, covered warrants. Retail investors could buy them for 27 cents, but their brokers would have to go buy the underlying shares at $400 to neutralize their position. And I believe that unwinding is the principal cause of this sell-off, and then exacerbated by the pullback in the technology stocks in the United States as well. So those are the two primary things. And perhaps I might add as well, sorry, I forgot, that there's been a lot more regulatory guidance from China. They're clearly not comfortable with the way Hong Kong in particular has gone up so much this year, so they've been trying to limit southbound flows into Hong Kong.
Yeah, guidance is a very diplomatic way of putting it, Mark. So how do you view emerging markets going forward, and specifically, how do they stack up against developed markets at the moment?
You know, it's always been this thing that people look at emerging versus developed going back 30 years, but I feel like they're kind of merging, because now the technology sector is so large in both of them. Technology is about 25% of the U.S. market. It's higher than that for the emerging. It's somewhere between 25 and 30. And so, you know, when you're talking about Tencent or Alibaba versus Facebook or Amazon, do you know what I mean? It's sort of blending. And I think I think it's still a good space to be in, primarily because of its valuation. If you just look at the Chinese stock market, the H shares listed in Hong Kong are the only market in Asia trading on less than 10 times next year's earnings, and they're still throwing off a pretty good dividend yield of 3.5%. So the valuation is supportive, and then I think that the growth rate is also supportive because we are getting synchronized growth in the world for the first time in 7 years, and we don't see that ending for probably around another 2 years.
All right, moving on, MD and CEO of Bajaj Allianz Life Insurance, Tarun Chugh, said in an interaction with Bloomberg Quint's Ridhima Saxena that the company would maintain a 65% share of ULIPs in their product mix. Let's listen into that conversation.
There are various segments of customers and their needs are different. On a very holistic perspective, I would look at our ULIP mix is about 65%. I think it's a very healthy mix.
So the guidelines for private equity funds came out, I think, day before yesterday, and they have allowed them now to become promoters, and which will be a big positive for the unlisted insurance firms, because now they would be able to get more investments. Any talk there, or is Bajaj Finserv still looking out to sell the Alliance's stake in Bajaj Allianz Life? Would you be able to comment on that?
I think you've mixed two elements to this. There is no such plan to sell. Bajaj is very committed and Allianz remains very committed as well. So there is nothing there from our side. As far as the regulation on private equity is concerned, I think it's a very good forward-looking step. And as usual, I think IRDA has done a lot of homework before coming up with something. Of course, they've put limits of 10 and 25, which is like one private equity firm can take up to 10%. So there is no concentration in one single hand. But the overall cap is 25%. I think it's a good start. It's a really good start because, and we were listening to what the IRDA members and the chairman wanted to say. They want to really know the phase behind the investment. What you don't want is that you do not want to become handling people's money for the long term. It should be the right strategic investors. And I think that IRDA has every right, and they've done a very good opening for the private equity sector there.
So when it comes to Aadhaar linkage, you were speaking on the panel, you were saying that you wish it was till 31st March. How is the Aadhaar linkage of the policies going, and by when do you see all the policies getting linked?
So I think all of us are working hard to get it done by 31st December, and everybody is just focusing on this at the point in time. Of course, a little showstopper here is that December is a very important month. So it is, we are kind of straddling too many things, and there is the last week which a lot of people still take off. So we're trying to do a lot of things. I don't know the customers will be accessible in the last week of December. I don't really know. So, but we are all making efforts. I hope there is some more time we can get, whatever the government can give us.
Okay, one last question. Considering that the solvency of the company is really high and the company has been doing well, are there any plans to go public and to claim or to give the benefits to Bajaj Finserv?
None of our investors want to sell more because they're already pretty happy and they don't need the money. So there is no need to do an offer for sale like the other companies have done. And the company is, like you said, very high on solvency. We have got close to 600-700% of solvency today. So from that perspective, we don't need the money either. So there is no real plan as of now.
Most important.
Moving on to the next story, a late entrant into the US, Cipla wants to play catch-up in the world's largest pharmaceutical market. A lot is riding on the drug maker's 3 big launches lined up over the next 3 to 4 months. Speaking to Darshan Mehta, the company's global CEO and managing director, Umang Vohra, says the aim is to get a quarter of Cipla's total sales from the US within the next 3 to 5 years.
We know the number, right? I mean, we've got our own planning and we know the number and we know what range that number will be. I would probably say that we believe that the US should at least be 25 to 30% of the company, right, in 3 to 4 years.
25%?
Yeah, 25 to 30% is what our aspiration for the company is in the next 3 to 5 years.
Okay.
And, the company is growing, as is the US, but that's where we want the US market to be.
What about margins? You've said that, at least for the near term, margins will be in and around this level. For this year, you've guided for it'll be sub 20%. But do we see the possibility over the next few years that, again, you might inch back to the 22 to 25% mark?
Okay, so I'm going to say something which may be controversial, right? I think so first of all, we've moved from about 14 or 15% back, right? And we've now at a range of about 18 or 19 in this year, broadly, right? and our endeavor was to reach. We wanted to target where the rest of the industry was, right? So you have a range of companies operating today in the 24 to 28%, and one or two are higher than that, right? But broadly, the range was 24 to 28 of margin, and this was by increasing our R&D. So we moved from 15 to 19 by making R&D move from 5 to 8%, right? So I believe that normal of 24 to 28 today, Darshan, for the rest of the industry, is possibly somewhere the 22 to 24 range.
Okay.
Right? Because post the US price erosion, etc., I think the industry is looking at a new margin normal. It cannot be the same margin normal that happened earlier. And so if it is 22 to 24, depending on the mix of how quickly the US scales up for us, and what type of price compression we see in the US, I think Cipla will eventually get there, but we are in no hurry. I think if we are even at the 20 to 22 range, we're actually okay from a 2-year, 3-year perspective, because Cipla's ethos was never to be the largest margin contributor in this industry. Its ethos was also to do a lot of good. So, we'll be the first company along with Pfizer to sign up for oncology care in Africa, right? And we've done that. And not all of our business is driven to get margin up to be the best in the industry.
No, it's not being the best, Umang. It's basically, I understand what you say is there's a responsibility towards patient, but for a company, there's also a responsibility towards shareholders.
Correct.
Now, if you're saying that you move from 15 to 18%, that's a good thing and you've achieved it. But still, it's subpar because I know that some of them have come down. So I'm just asking, if you're saying that 22 to 24% will be the new normal, you're still below that. So when will Cipla reach that level?
So as I said, we're looking at a 2-3 year window to get ourselves there.
And how do you intend to do it?
Well, I think it'll come out of our mix, our growth. It'll come out of complete control on costs, like we're doing even this year and the year before. So all of that will contribute to us getting there. But I want to go back to that point. Cipla doesn't believe that the quest of margin growth is superior to the quest for patient safety and quality, right? So in our list of principles, we're very clear that we'll get our margins in the interest and service of patients.
Okay.
Right? Because that is why we were created. We were not created because investors wanted to invest in us. We were created to do well for the society. So we believe that if we do and we play the right game, right, we make sure that we have quality and compliant manufacturing, quality products for patients. We believe that if we reach the 22% range, we're okay as a company, right? I don't think we're going to kill ourselves to say somebody else is 24 and we're 22, right? Okay. That's fine. Now we would have killed ourselves, and we did, if we were 15 and the others were 25. Okay. Right? That's not acceptable from either by Cipla's board or from Cipla's ethos, right? That's when the issue of, you have to be responsible to investors come in. But if we are within a distance of 2% we're fine, right? It's okay. So we have moved from 15 to 18, 19 now, and it's likely to, over the next 2 to 3 years, we'll try to take this 18, 19 to about 22 or so, right? And then I think that's where we will settle in.
Okay. Before we move on to the other markets, just my final question on the US markets. You said that most of these new launches that will come out will play out in the fourth quarter. What about the third quarter? How much?
So we'll see 1 month in the third quarter.
So Q3 will be better than Q2 in a way for the US market?
For the US, yes. Yeah, Q3 will be better. Yes.
Well, what about the domestic markets? Now the GST is fully priced in. You've had time to see what exactly is happening and how this entire scenario has panned out. How do you see the domestic markets moving in the next few quarters for Cipla?
So I think the domestic markets we've said we think we should be recording growths of between 13 to 15% quarter on quarter, right? The quarter 2 growth was a bump, because in quarter 1 you had the destocking, quarter 2 you had some restocking, quarter 3 is really settling in now. So, but we're still looking at 12 to 15% growth for the rest of the year for Cipla.
Okay, what's the pipeline like? Which are the new drugs that we can expect over the next 4 to 6 quarters? How many are probably a para 4 or large opportunities that you're looking at?
In the US?
In the US.
So US, I think we could, see the para 4s are all public domain, right? So there's no point talking about them. We have a fair number of limited competition opportunities, but the thing is, Darshan, this is a moving target. Today I may think it's a limited competition opportunity, and I might think that I might get approved in February, for instance, right? But till February, they might have 3 more who join the fray, right? So then it doesn't become a limited competition. But I'd like to believe that we have a fair number of limited competition launches, and we've guided to this that every quarter we'll see one. right? We had said that in Q2 end we'll see one, in Q3 we'll see one. Unfortunately, the Q2 end moved to Q3. We saw 2 in Q3, right? So I think we are still guiding to the fact that we are hoping to see as an average 1 per quarter. So we will see 1 launch in Q4. We will see 1 more launch in Q1. So we have a list of this mapped out for ourselves, and I think that's.
But which are these large products that you're looking at?
So they may not be large in the way we know it, right? So for example, Pulmicort is a $500 million market today, right? But it's only 4 players. So there's a good chance that you can get to 25 plus million, right?
Yes.
So I think that's the type of target we are after, because from our base, we don't need a 600 million product.
Yes.
We don't need a 100 million product, right? If you were $1 billion, our worry would be different. We need a 100 million product to create some impact, right? For us, a 30 million product is a big product, right? From where we stand.
So which is the next product that...
so I can't give you a name,
Okay.
but I think there are quite a few in our pipeline, and we're hoping some may be on the institution size, right? Some may be institution size. Some may be in the $200 million mark today with no generic. Right? Now, there could be 3 generics by the time we come in, right?
Okay.
But those are the type of products we're after.
Okay. It's important to ask this question because the scenario is, what are there any pending regulatory issues at any of your plants?
No.
All of them have been cleared?
So we have been audited at Goa in the June time period. We were audited in Indore. Goa was end May, Indore was June, and we were audited in our facilities in Kurkumbh in March. Now, all these 3 are very big sites for us, and most of these are all US FDA audits, right? There are also MHRA audits that are happening. So we have received EIRs for almost all our inspections. We were audited in Bangalore in our API sites in February, and we've received an EIR for that. We received the EIR for Kurkumbh. We've received the EIR for Goa. Right. And the Indore one was more inspection limited to a certain product. It wasn't a full GMP inspection. And I think that also we are hopeful of resolving with the FDA.
So right now you're all clear in all?
We are all clear.
Okay, with that, it's a wrap on this edition of Countdown. Thanks a lot for watching the show. It's goodbye from Neeraj, Pradeep and my side. Stay tuned to Bloomberg Wind for news and updates.